So joining me now to talk more about those numbers and what it means for our economy is our financial expert, Brent Wilsey. Welcome.
Good to be here.
Great to have you, because you know what? There is a lot of unrest right now. I mean, seeing that kind of a drop in the Dow and everybody's pointing to the coronavirus, what say you?
Well, what says me is that this has happened before, and it is kind of scary when you see it. We tell people, you know, if you've got good, solid companies, don't worry and don't panic. And you've got to kind of look what happened before. If you look at SARS that we had before, it was terrible. 1 year after SARS, the market was up 20%. So don't panic. Don't go to cash and say, oh, I'm going to, you know, why would you go to cash earning 1%? Well, over the next 2-3 years, you get companies earning a 3 to 5% dividend. Be patient, understand what you have. Do not make an emotional decision, because it is scary right now, but it's going to be resolved.
What happens when, you know, all the news starts to settle down? Let's say, you know, they figure out how to contain it, they figure out how to keep people safe from it, and then it starts to drop in the news cycle. What do you see happening to the market at that point?
Well, then the market moves on. And what's that happening now is that because the cases are increasing right now, and there's a growth, like, oh, more cases, more cases. Once that growth slows down, it's not going to be in the news as much, and then the market can move on to something else that's maybe more important at that point in time. So that's what I'm saying. Don't panic over this. And the words they use, oh, we could have a pandemic, we could have an epidemic. I mean, it scares you, know, people sell. And only about 0.6% of the volume on the market is actually trading. That means 99% of the volume is not doing anything at all. And most of those trading right now are your high-frequency traders that are in and out, maybe 10, 15 times a day. So don't make judgments on that if you're an investor. Those are traders trying to get a penny or two off the move.
Okay, well, in this political arena that we sit in, is coronavirus really the only thing that was affecting the market today?
I'm so glad you brought that up, because the other thing that happened today was, and it was kind of downplayed somewhat, was that coronavirus, yes, but also, too, over the weekend, Bernie Sanders took Nevada. And that is kind of concerning, because if he gets to be president, he's talking about he wants to go after the banks, he wants to go after the healthcare companies. That's going to hurt the market overall. So that was kind of on the back of traders' minds as well. Like, let's be cautious here. And next week is what, Super Tuesday, which is going to be a big time. If he takes that, you can see another pullback, because he is not going to be good for the economy or for the stock markets.
Because he doesn't have a lot of numbers. He was even caught in an interview over the weekend when they were asking him, okay, so how much is this Medicare for All going to cost? And he really didn't have those numbers. So I can see how that's really going to relate to what people are doing as far as their investments.
Yeah, and he's really going more on the emotions of people, trying to get them to vote for him, not real strong numbers on the economy. I mean, he's trying to go where we're going to pay off your student loan, more student loans, free college, all these things that don't back up with the numbers, not good for Wall Street. And again, if by some chance he does get elected, that is going to not be good for our economy, and we're going to see a major turn. If your 401k right now is doing pretty good, it's not going to do so good.
Interesting, though. You say, I mean, the market is doing well. We know that. The economy is strong. How often has a sitting president lost when the market and the economy are doing so strong?
I think it's never. And that's the thing. And that's one reason, too, that could be concerned with the coronavirus. And I think it's going to be not over in a month or two, but it's not going to be the front page news any longer. And when that happens, it's going to move on. Now, if by some reason it does become really bad, becomes an epidemic, and it's still here in May or June, that could be a problem for the economy, which could hurt the president. But I do want to point out to people as well that to move 0.1% on the GDP takes $22 billion. Now, that is like Starbucks right now. They're saying that's a $25 million hit per week for them. It would take 880 weeks to hit that $22 billion. So it's a mega number we're talking about.
You know, we start hearing these numbers, and because we're, you know, not as versed as you, we think, oh, wow, massive plunge. But you're saying, calm down. Let's keep riding it out and just have a little patience.
Yeah, and our economy is so strong right now. What could hurt us is what's called the supply chain, because you want an iPhone. Well, perhaps that little part that goes in the iPhone is stuck in China because the manufacturing plant is closed down. Well, you can't get that iPhone until they get that little tiny parts that can hold everything up. It can destroy the supply chain and the distribution of products that we want to buy. We can't get them. Maybe you buy something else. Maybe buy a Samsung. I don't know. So.
This was a Samsung plug. I hear you. All right, I got it. You always have a calming effect on us, Brent. Thank you so much for stopping in today. Okay.